All right, welcome everyone. Look at this, with 4 people on here. Amazing. I think that's a record. Welcome, guys. It's Tuesday, the second best day of the week. Bitcoin's pumping, all coins pumping. I don't know what to say. It's just fantastic. How you guys doing?
Doing well.
Very well. I mean, how could I not be well with prices over 70K again in Bitcoin? 71.
Yeah, holy shit.
Almost. Oh my God.
Yeah.
Dude, Victor, do you remember
excited,
the
guys.
Euro?
I'm ready to hit the markets.
Nice. All in Bitcoin. That's it. That's what we're going to do
Before we
today.
get started, should we just, set it off with a nice...
Oh, yeah.
We can't start off the stream without that, unfortunately.
All right. So yesterday, do you remember the EUR USD long setup we looked at yesterday, Victor?
Yes, of course.
Let's go through it.
How did it go?
Yeah.
You got your first TP?
No, I got my second tip. I'm gonna show you right here. I'm gonna share that one, and actually, funny, not well, maybe not very funny, but this is the setup, and quite amazing move, I must say. It's an amazing move. So the idea that I had here. So yesterday, obviously, we entered this yesterday based on, like we explained in yesterday's live stream, entered on the the break and retest right here. Got in here, stop loss down here, and the idea was to kind of ride this move to the upside. We marked out our 3 levels. We had the FTA, first trouble area, and then you had the second level above, and then the third one up around this area. We also have the 0.618 of this down move. And I mean, TP1 got hit, I closed 50, and then TP2 got hit this morning or something, and I closed 25% of the position. And I was then going into MetaTrader, and I was right clicking the position. So I pressed right click, and I was gonna click modify the position. Right above modify, you have close position.
I've done that.
So of course I pressed close position instead of modify. So yeah, I sold this position here out fully. Still, it's a good 3R, but I mean, yeah, not the best. But then I looked at the lower time frames, and there was actually a pretty good retest right here. So I'm thinking about perhaps entering a trade live here fairly soon based on this 50-minute structure. And basically what I'm looking at is we had this consolidation here, we broke and retested that level, and now I'm looking at this 50-minute trend. The only problem I'm having with this is obviously the fact that if you go to the daily and you add the moving averages, you'll see that you're coming into a decent, yeah, it's like it's that level, and you have the daily moving averages here as well. So I think maybe I'm too influenced by the fact that I exit this position, and maybe I should just be happy with 3R and kind of leave it and wait for the next major opportunity.
Maybe the
3R is amazing, man. Congrats.
Yeah, that's very good. Maybe the question you need to ask yourself is, if you didn't have the first position, would you be entering now? Because if you would, then means that it's a valid entry and you should take it. But if you're doing it for other reasons than because of a good setup, then maybe you should wait.
Yeah, I mean, I think this level becomes even clearer on the line chart. I mean, what I'm looking at here is basically, if we remove everything here, I mean, we're basically, I mean, this to me, looking at the line chart on the daily, this is, going long here is might not be the best idea when you have, basically you have this whole region right here as probably one of the strongest resistance. This.
See, sorry to butt in, but what I can just see from there as it's still bullish. Like it's still, that leg that you're seeing right now is still within the last leg before that breakdown. Do you know what I'm trying to say? If you go back on the daily, So if we're looking at that market structure, before we had that last push up and we had that higher high, we're still within that leg, within that range. So whatever's, so until that last leg gets broken, you're still in an uptrend. So to be honest, going long here is still valid, but you do have to take into account that, it's still valid, but you just gotta just take everything into account. But I would still go long if you can get into a retracement, a good enough retracement, obviously. And we've got news coming out as well soon, I think. Just got to keep that in mind. But I also got into a trade on you, and I actually did the opposite of what I should have been doing. With, you remember, Jonathan, at the start you had problems with, closing trades and micromanaging trades. Well, I actually closed the trade early before it actually went to the take profit. We made some good profits, but still micromanaging and closing trades early is a problem that I had a little bit today on the Traderlicious podcast, or the Traderlicious trading room.
Yeah, I mean, I definitely looked at, if I wouldn't have been patient, I would definitely have exited this trade here, at the first FTA that I saw. But I think when we looked at the, I think I played this trade very well. I think, well, obviously not because I closed it by mistake, but the general idea, and if I wouldn't have closed it by mistake, I would basically have put my stop loss here and then had that last 25% moved it up. So I think, that's definitely a problem that I've had as well. Micromanaging the trade and exiting the trade too early, or I think my biggest problem is moving the stop loss. I think that kind of like moving stop loss to especially moving stops to entry too early, and then getting stopped out at entry for a very very small loss.
What about you, Victor and Dirk? Do you have anything that you've been watching and looking at?
Sure. If I may go first, I have. Let me see. Let me share my screen first, of course. In the meantime, I was unaware that I wasn't sharing. Now I am. All right. Yes. I'm looking at the, as you guys know, I'm trying to go, I try to catch daily bigger moves, right? But I'm an intraday trader. So I start with the H4. And the H4, after we had this bullish move from this order block, which I took yesterday. This is GU, by the way, not EU. We did form a new fresh order block, which is this one, right? That's the dead engulfing, right? The last one. There's another one here, but I'm looking for the freshest one, the most recent one, to be more relevant. So if I have that, and market formed it, and is now retesting it. At least that's my interpretation of what's happening now. If I go to lower time frames, I can find the same structure on not the H2, but on the H1. You see there's another order block there. That's the decision point. So this is the area I'm looking to go long, that for that possible move like this. All right. So it's not a quasi, it's just a fresh order block setup. If I go to the 5-minute, a reversal coming off from this area. So the head and shoulder, or the Quasimodo that I trade, needs to have at least the head inside of this area, right? So that would be the left shoulder, the head, and I'm waiting for that possible right shoulder to catch my trade. On the 5, there's nothing yet. It hasn't even, the neckline is all the way here on the 5-minute. So that's there. You don't have a quasi yet. On the 3, you don't have anything yet, but you do have on the 1. If we go closer, you can see that's the area that I'm trying to catch, and we did break the neckline, and I'm waiting for that retracement. So as we speak, we might get, not as we speak, but in a couple of minutes, we might get a return of price to these order blocks, and I'll see if price wants to reject them. I get a signal, and if not, then I just let it go. That's what I'm looking at. On EU, I don't have a setup right now.
But I think the local structure looks pretty similar to EU and GU, right?
Yeah.
Yes,
it's
it
pretty
does.
much. On the maybe not. Yeah, no. So maybe not, because on GU you're quite, looks like you're kind of ranging, and you're testing like range lows, and then on EU you're basically, on EU it's different. You're definitely trading higher on EU.
Well, the setup is based on the fact that this move that started in Asian market went out and is now retesting it, and the idea is this could be the ignition of a bigger move, like a continuation move.
Mm-hmm.
Like yesterday, we had this move, a retest of that order block, and then the move out of it, and then now we price kind of ranged at that like little top of yesterday, and is moving out, retesting it again. And I'm not hoping, but I'm perhaps, if it is going to have a continuation move, then this is the best place to catch that move out into perhaps the ATR of EU is around. I'm sorry, GU is right now at 72 pips. So I'm gonna try to catch a portion of that move.
I agree with you on this one. I like GU for a little bit higher.
Yeah, well, I'm looking at EU and I'm thinking it's probably going to go higher as well. And honestly, like GU and EU are pretty much following each other most of the time. So if you guys are looking for long in GU, I think, and if you look at the local structure, even the 1 hour on GU, you have somewhat of similar move on both of the pairs. It's just the levels are a bit different, but it kind of looks like GU is lagging behind and might get ready for that move higher. And it seems like EU has just broken out. And the setup that I'm watching on EU is, I'm very tempted in taking this trade, even though we have the daily resistance. We're right into a daily resistance, but like Alex said, the move down that we
daily
had
resistance?
now was just
we got a little bit of daily resistance. Depends.
You don't think that's daily resistance, Victor?
No, I'd say if we're looking at EMAs, you've got quite a little bit of EMA resistance in that area. You've also got a little bit of support, a little bit of resistance in just normal support resistance levels in that area. But again, these levels are made to be broken.
Then again, it depends on what your definition is. But because in terms of order blocks, I don't have anything on the daily up to this area, right? Because the other one we had a resistance here, a supply zone, but that has been broken by the close of this bar outside of it. So to me, there's on the daily, there's nothing stopping price all the way to this structure that might be what could stop price, or it could be forming a new structure, but I mean nothing pre-existing. In terms of order,
But I mean, when you're looking at support and resistance, are you only taking the order blocks into account? Because like what I see on in terms of horizontal levels, supply and demand here on the daily, it's to me we're obviously in a resistance area. So when you're looking for resistance and support, are you only looking at order blocks? Because then, of course, if you're only looking at order blocks, then you have a lot of room to the upside. But if I can just switch over to my screen, and can I explain what I'm looking at is, I mean, this level right here, this blue box right here, to me, it looks quite, to me, an obvious resistance area. And if you switch the candles, you'll see that, to me, resistance is basically where price comes up and gets rejected simply, right? And this level right here is exactly what's happening. You get rejected at resistance, and then a bounce here, around as support, and now we're coming back into that area, and right above, of course, you have the 50% fib. So I think, and also if you look at the 4-hour, it's I mean, it's not as obvious here, but there's definitely a horizontal level at the way I see it. Now, of course, so that's what I'm saying when I say resistance, and then also with the daily moving averages right in this level, obviously kind of increases the confluence of this as resistance. But you're saying there's no order block here, but does that mean that there's no resistance here?
There's no, to me, I try to keep it as simple as possible, and I have in the past been looking for like all the way to the left, how many touches, like Trader Dante teaches in his course, right? You look for
Dante.
You have the you have those levels, right, where price comes to the pip and reacts on both sides, and the more you have to go then go at each level and identify which level has been reacted the most, and then you get like a number of levels, right? That's how other people do it, and it's valid. It's not it's just different. I just chose to, because the issue I had with that kind of form of level, the supporting resistance, is that there is a degree of subjectivity to it. What is the major one? Which one will market react to? And that might depend if I'm greedy or not, if I'm fearful or not. I'm gonna go to the be more conservative with my levels. The next day I might be a little bit give them a little bit more leeway. And my answer to that is, and I couldn't reach much consistency and a lot of profitability with that. So I try to focus to be more objective. And my answer to that is to use like less things. And perhaps I'm going to be missing, of course, but I'm only going to be using, and that I made a choice, I'm only going to be using order blocks and quasis. And to me, those are the area of support and resistance, supply and demand. And everything else, I just have to accept. I will not be seeing, I will not be knowing about them, but I keep it simple in that sense. And that keeps and it's objective, because an order block is an outside bar or an engulfing. There's no discussion if that's a supply, if it's in the area or not. And the other thing is, once it is the price, the first time it closes in the same time frame, outside of it, I take it off. So I don't look at anything, any structures that could have been like 3 weeks ago, and price will react to them again. I know that. But to me, it's going to be difficult if I have too many moving parts, which one I'm going to listen and how I'm going to decide when to stop trading something. Because if I have a lot of levels, I might be, think, okay, there's another level. Okay, this one will be the one, or not. Maybe it'll be the next one. So I keep it as simple as possible, and that's why I only use order blocks. But it doesn't mean
I think it's
the only way to do it.
Honestly, I think it's super interesting the things you said, because I like the way you explained. The reason why you're only looking at order blocks is the exact same reason why I'm always only looking at horizontal levels. Like I try to keep it simple and have less moving parts, and that's exactly why I want to have the horizontal levels on. I think this is a great example of where you have two people who are basically trying to keep it as simple as possible and just have as few actionable signals as possible, but we're using completely different techniques to come to that conclusion. And you saw yesterday that we also used two different techniques, and we looked at the same trade. We looked at almost the same entry. But we are talking about, like, you're talking about how you do not want to use horizontal levels, and I'm basically saying like, order blocks makes no sense to me, but we choose the one thing that makes sense to us, and that's something I always say, like, if you're on YouTube and you're searching for different trading systems, right, and you should always try to gravitate towards the thing that makes sense to you. If you see something that's like, that makes sense, I like that fits my personality, like that's probably the way the way you should be trading. So yeah, it's very interesting to have different techniques. It's different because when me and Alex are on here, it's just like, yeah, I like that setup. Yeah, me too. It's like stop loss here. Yeah, exactly. Like it's all the same. Like it's all the same setup, all the same methods.
By the end of the day, it's always like a game of support and resistance. Whether you call it order blocks like Victor does, whether you use horizontal lines, it's like you just said. Actually, the different expression for the same. That's what it boils down. I found it quite. Go on, Victor, please.
No, I'm sorry. Go ahead.
Okay. So I found it quite intriguing, Jonathan, what you earlier said. Can you maybe share my screen real quickly?
Yeah.
You said, I think you said that euro dollar basically has moved ahead of GBP, of cable, right? And this is actually also what I saw today. For me, the problem here at the moment with euro dollar is, however, why I'm not engaging in a long trade is that we are on the 4-hour chart. Just a margin below this 200 days at 200 times 4 hour, 200 EMA and the 50 EMA. So I would like to see actually the price first piercing through this with a nice candle. And then I would go down to the 1 minute chart maybe and look for the breakout there if it's happening too. I did something like this, for example, this morning in cable when I saw this candle here. Let me quickly mark it here, this one. When we had this nice breakout over the Monday high. And you can see this here on the cable one, on the 1 minute chart as well. Yeah, here it was. So we went on the 1 minute chart also over all the EMAs. And what I like to do, what I did then this morning, still quite a new concept for me. So I kind of copied this from Alex actually, using those 50 and 21 EMAs, is that I waited for the price to go back into this area here between the 50 EMA and so I had my order here. Or I opened a trade, had a stop loss down here under the 200 EMA and an R limit order at 2R. And this one worked out really, really nice.
Nice.
So this is what I've been trying to do all week since news, because I found it last time really intriguing when I watched you guys, when Alex talked about the power that in trending markets on the lower time frame, you very often see that the price likes to go back to in the first pace to the 21 EMA, and then when the trend slows down, you see it very often going first back and bouncing off the 50 EMA, and then finally going all the way back to the 200 EMA. And then you can either have a trend change or it starts all over new again. So I entered here the second time also, but this time it didn't work out, for example. But still, I had one stop hit and one trade with 2R, so still a bit of profit left then.
Nice. Do we have any setups we're currently watching on any of the forex pairs? If not, then I suggest we go over and kind of go look at Bitcoin, because there's lots going on right now with Bitcoin and the altcoin market, and would love to hear also Dirk's views on the net inflows on the ETFs and things like that. So do we have anything on EU or GU right now to perhaps?
I just took a loss. If you want to, just took a loss on GU. I was thinking there was going to be a little bit of a continuation, but the same trade that, we would have taken, it hit the 200 EMA on the 5 minute and now it's continuing down. I actually got caught off long. So that's the only thing that I've been doing. I don't know. What about you, Victor? You in anything?
I have the, you can show my screen perhaps, and I can show you what happened since we just talked. Since I just presented the structure, we only had a 1 minute quantity, the 3 minute never activated, and the 5 minute never activated. So that already tells you something. It's only showing on 1 minute, and it's also not showing on the 2 minute. I didn't show it here, but the 2 minute neckline is also here at the 3 minute. So that's already telling me that the reversal is kind of weak. It's only on one time frame, and this is the order block, the entry order block. What did price do when it came there? It went through it, and that's the 3 minute time frame. I'm sorry, but it went there without any problems and closed below it. So it invalidated this setup. I don't have anything. So even though the setup on the hourly are lined up, if on the lower time frame, if it doesn't show, I sit on my hands, and I will have to wait and see. Maybe if it forms it now, it can maybe do it something like this, and I can still take the move out. But if it doesn't, it needs to show it on more time frame. So another thing Dirk mentioned that I think is very valuable. Dirk, you mentioned that how you were describing how the behavior of price coming back to certain EMA and then reacts to the other EMA. And there is a lot of value in that, in the sense that those patterns, because as traders, we trade patterns, and not only visual patterns, but behavioral patterns in the market, in price action. And I think that is one of the things you get with screen time, with experience. When you spend a lot of time, you have seen this happening already. What after this kind of move, there's a pattern. There's like a higher probability of something else happening, even though it hasn't happened yet. And those patterns is I think those are the intuition. People think, okay, I feel like this is going to happen, but it's not just feeling. It's because you've seen it so many times in the past. That's my opinion.
Yeah, I mean, trading is like always looking for patterns, things that repeat itself. You know, I always like to make this analogy. If you see like a pro tennis player or golfer, they also always have the same setup, pre-shot routine, I think they call it, where they always do the same things before they serve or before they hit their golf ball. And they do that because they know when they do that, there's a high chance or a higher chance that the result will be like envisioned by them. And this is what we are trying to do basically as traders as well. That's also why I have my same morning routine every day, because that gets me into that mindset of beginning the day in trading. Yeah, absolutely. So these patterns can also be psychologically, in my opinion.
How long until we get news coming out?
We had already
30 minutes. I'm actually gonna take a. So I'm gonna take a trade.
What news is coming there?
I think we got consumer price. Let me have a look.
Consumer confidence.
Yeah, consumer confidence.
The German one or what?
US. I think it's US.
Really?
Yeah.
Should be.
Dirk, when we're looking at stuff, let's a little bit more on the fundamentals, because I know obviously you've dealt with a little bit of this stuff in your past. When it comes to the consumer confidence, what does that indicate? If it is under consensus or over consensus, what is that going to indicate, and why would people react a certain way when that number comes out?
First of all, I don't think the markets will very much react to this. This is not like super high important news in my opinion. That's why I didn't have it on the radar for today as well, because I always filter here on TradingView for the high impact news. That's why I thought you were talking about the one we had an hour ago. But in general, I mean, it's from an economy or economists standpoint, it's of course important, especially for the USA, because the USA are a very consumer-driven economy, meaning like whether people are spending a lot in retail, spending their monthly paychecks or they don't, that makes a big impact on the economy. So you kind of can get a tendency on what is going to happen in the future for the markets. This is going to have an impact then on the GDP growth and so on and so forth. But as I said, I think at the moment nobody's really looking at it. So the news I'm really concentrating on at the moment and analyzing is still inflation rate, which has been like my main focus for I think the past 2 years now. Jonathan probably cannot hear me talking about inflation rate anymore. So this is what I would actually look at. I don't think it's going to have much of an impact. I might be wrong, of course, if the number is like totally unexpected. It could have. But in general speaking, a worse number, consumer confidence, would mean a typical risk-off move again.
So I'm actually taking along here on EU. This is a very low risk trade. I know there's we got news coming out. It's a very high risk to reward trade, and it's based on the. I'm gonna show you. You guys are probably not gonna like this, but it's basically the we have the news coming out in 30 minutes, and I don't recommend trading like this at all. So normally I take 1% per trade on this account, and this trade is like 0.2%. So it's much smaller than the previous trades, and I'm hoping that we're going to get that push up. So if you look at so we can see if we can. So I had the idea that I wanted to get in on the lower time frames on the retest of this level. So you had this move up, and then you had that move, and I wanted to get in on this level right here. And the reason for that is there's a lot of good fib confluence in this area. So if I remove all the fibs, I'm probably gonna get stopped out on this one, but it's I get some interesting confluence here with the fibs. So first, if you add the low and the high of like the daily push up, which would be, the hourly. So on the hourly you have, so this is on the 15, but if you look at the hourly, you would have this low to this high. And right there you have the 50% fib. So that's the 50% fib of that move. And it's actually this level that I was looking to buy on the retest. And it was really that bounce that I wanted to get in on. But then you have, if you add the fib from this low, which is on the 15 minutes, you get that push. So from that low to that high, you'll see that you have great confluence with the middle of that reload zone, right inside the 50% fib. So you get the 50% fib with a bigger one, and then you got the reload zone right here. And then if you add a low time frame fib, so you can go to the 1 minute, you add it right here, you get the reload zone of this move as well, right on the 50% of that bigger one. So sometimes when I find that you have confluence with the fibs across different time frames on different moves, you'll see that that a lot of people, even on the lower time frames and slightly high time frames, are looking at this area for a buy. And usually that's a good level to get in. Now, the reason why I risk 0.2 is obviously because of the reasons that we talked about earlier, that we're basically going long at resistance and we have the news coming out. But as Dirk said, the consumer confidence usually do not really affect news that much. And if it does affect news, the risk to reward of this trade right here would be worth it if we get a push to the upside. So that's what I'm watching right now. And because of the fact that this is high risk, I'm putting an alert right here above the local highs. So if we do get a move like this, I will probably move my stops right here. So this would be a very, very small loss. And this is just a set and forget trade basically. So I'm just setting a TP up here at around the 0.618 of this down move. So again, it's based on the same idea where I wanted to go long here for that move higher. But now I'm kind of like just playing the lower time frames to see if we can get that push up. Maybe we'll get that push with the news, because most of the time you'll see that you have news events coming out, and it will act as a catalyst for technicals, right? So if, for example, you have major news coming out at support, a lot of times you'll see a nice bounce, because remember that I believe this was FOMC, right? So I remember talking about in the live stream, we had a possible 4-hour W forming right here, and then we had the FOMC, and that kind of added, worked as a catalyst for that to play out. So we'll see what happens here.
Nice.
I'm euro-dollar short, by the way.
You know what, Dirk? Do you know what? I was looking at it and I was just thinking, I'm sitting on my hands because I can see reasons why to go long, and I can also see very good reasons why I would want to go short right now.
Yeah, but just to mention, my trade is a bit a longer term here, so it's like unrelated to.
Okay. So yours, what are you looking at on the time frame? Are you looking at? If I just throw over your chart, what are you looking at more long term?
Long term, I don't have those charts ready, honestly speaking, now for currencies. But of course, we can maybe next time go over that or later. And it's an indicator setup that I coded once, and it gave me some alerts, actually 2 alerts in a row, which is very rare for euro dollar. So I took the short there, but also with a very minor risk reward, because I don't like very much, as I just said, on the 4 hours, like the area where we are a bit in between nowhere here. I would like to see either for longs, and that's when I would reverse the trade, euro dollar going over the 200 EMA, and which is aligning at the moment with the 50 EMA, or under the daily open we saw today. Then it would be a bounce off this, which in my opinion is the most likely thing to happen at the moment. But
could you invert your chart for me, Dirk, on the euro for a second? Is that possible?
Can I what?
Invert the chart. Do you know how to do that?
No, I don't know.
I think it's Alt I.
Yeah, Alt I, hold Alt, and yeah.
Okay.
See, now me looking at that right now screams to me like it's going. If we're looking at the inverse, I would say that's going up. Obviously, we put it back down to its normal chart. It's screaming short right now.
Nice. I didn't know that was possible.
Because I have the thing. Sometimes I can see. I'm very good at seeing longs, and sometimes my eyes don't adjust to see shorts. So I use the inverse to kind of help me kind of like just get to grips what's going on. So I'm saying on the longer term time frames, we can see a push up. But again, on shorter term, I can see a push down. That's why I'm staying on. I'm not doing anything because I'm going to end up chopping up my account. I've already lost one. So.
That's a very good tip, actually.
That's really good tip.
I used to do that as well. Obviously, not this time.
It's good.
I think that is.
I didn't want to mention it before you took the trade, because it's always, that's so mean, where you're getting like influenced by somebody else.
If I invert the chart, it looks like a really good break and retest of the daily moving averages as well. I go back and look at this, and there's definitely a reason to go short here. I guess I'm gambling on the news to send us higher. But I mean, if I get stopped out on this one, and the 1 hour candle is going to close below my stop loss with that wick, then it looks like a good local top for a move lower, I think.
Yeah, this is where analysis paralysis comes in, because we've got so many. That's why Dirk is very right in saying we're in a weird area, an area where you could go long, you could go short, and this is the way where people are going to get their accounts chopped up. So let's just wait.
And I think like
either that, or you do it like Jonathan did now, with a very small position.
Because like I looked at everything, and I'm like, you know what, like I got that feeling where it's like I'm gonna take this trade, like I know that like somewhere in the back of my head, I'm like, you're probably better off not taking the trade, but then it's like a voice says I'm gonna take this trade,
But so there's a mind hack for that. I use that a lot. I have my master account with all other accounts enslaved to it, and what I do is, when I have a trade that doesn't fit my trade setup, but I want to take it, it's distracting me for going and looking for other setup, because I want to be taking this one. It seems to me like I have to take it out of my system. I need to do something with it, and the solution I have is I choose one account, either that be a smaller account, an evaluation account, or it doesn't matter, just a real account with a smaller balance, something that is not the main master account, and I take the trade there, and it's out of my system. I take it. If I win, I'm in it, and if I lose, well, I lost it, but it's not gonna stain my master account with my master signal. And that's how I keep my master account only for pure signals. Everything else, I need to trade them on something else, something with less importance.
Nice. It's a good tip.
That's a very good tip, actually. I agree.
Should we?
That's why. That's also why I'm trading on the. That's also why right now I'm trading on the evaluation account and not my live funded account, is because I'm I had a very good run. Like this, I believe this month I'm up 4 or 5%. So I had a very, very good run. But I'm still like it's trading that's discretionary on different time frames, including the combining the lower time frames, the higher time frames, is still something that I'm getting used to. So with the funded account, I want to make sure that I have a good. I want to make sure that this running streak that I have right now is continues into a while longer before I implement this into a live account.
I want to show you guys the account I mentioned yesterday. Think guys, this is a good idea?
Yeah, we'll have a look at that, and then we'll get over and Dirk can talk a little bit about Bitcoin and the strategies.
Or maybe later.
Let's
go for it now, because since we're on currencies now, we might as well stay on currencies and talk about currencies, and then we can look at our.
All right, this is this is the evaluation account I started trading on Monday. I just started trading it Monday last week, but I didn't trade it exactly on Monday because I didn't have everything set up, and but I didn't get any signals, or just a few, until Friday, and this move up is actually all based on Friday, on the 22nd. And actually, I saw normally I have a very low risk per trade, but since I saw the move and it was perfect, it was low volatility, I could have like a super tight stop. I went in like I think 10 times the risk that I normally take, and it worked out. I was risking something around 0.5%. So. And I went in. I didn't go all in, but I did go like way more than I usually take, and it worked out. And GU made something like a 40 pip move, and I caught most of it. I think like 85% of it, and that was it. So and I passed phase one. That's
nice.
That's the 20K high stakes account, and you can see the win rate, and this actually gives the viewer some idea from my way of trading. I can see all kinds of setup, but my win rate is very low, since I have, if you compare like the average profit 46 and the average loss, I have like it's more than 10 times the winners are 10 times bigger than the loser. So in order to get that, you will have to lose a lot of times, because you'll be wrong a lot of times. So you got to, and this fits how I am. So this works for me, but it might not work for everyone, because at 26%, you're going to be losing 3 out of 4. It means you're going to be losing most days of the week, and most trades you take, you're going to get accustomed to getting, losses. But this is it. So yeah, that's what I wanted to show. So
I talked about this actually with Rich. I was speaking about you actually, Victor, today, and we were talking about the way that you trade, and it was the fact that because you know your strategy so well, and because you know that your strike rate is so low, it doesn't affect you. It doesn't affect you emotionally that you're taking that many losses, because you know that that's part of your process to then getting that one winner that makes up and gives you actually more. And it's super interesting, the different ways of traders, because then we got another trader that I spoke to, and I keep mentioning him, but he has a minus risk to reward ratio, but his strike rate is up in the 85, 90s, so it's super interesting the way that everybody's got a way of trading that combines with their personality and is good. And I think when you execute so much and you're always executing, it gives you the confidence no matter what happens, as long as you're staying to how you trade, then you've got no problem with passing and no problem with making money.
You said you started this one on Friday, and you took 193 trades already.
Well, it's started on I opened the account on Monday, but I think my first trade was on let me see, the 18th was my first trade, but it was a small, just 1 or 2 trades I took. It was the 18th Monday or Tuesday, I'm not sure, but these trades are
Monday.
Monday. Okay, so I did take on the first day, but the thing is, it's very variable. If I have setups, I will hit it all the signals I get, and some days I don't have many signals. I may have like one or two, and the other reason that I have a lot of trades is that even though I put more risk on, I don't change the lot size in this case. Well, normally on my master account, I do adjust the lot size, but in this case, since I do it manually, I need it to be fast. So
that's over 60 executions per day on average.
Well, it's
1 minute chart. Yeah.
The thing is, I think. Go ahead.
Please. No, you go.
The thing is, I have a risk in my mind, and since this account I was doing manually, I don't have the time to be calculating, on the 1 minute sub 1 minute chart, if it's 1.6 pip, and I can change that stop loss in like 5 seconds later. I have to do all the calculation. I cannot have that. So I need to have data, and I need to know, okay, what is my average lot size? What is my risk going to be? Because on average, it doesn't really change that much. So you can have extremes, but the average is usually around the same thing. So I take the average, and that's 1 hour, which is normally what I take, which is 0.5% of the available DD drawdown. But in this case, I saw multiple signals, and at a certain moment I saw that I could stack it in, and I was putting more trades on than there were signals, and it worked out. It doesn't work out all the time, and this is not how I trade normally with my master account. I only take my signals, but this is something special, well, different, because it's an evaluation, and you wanna step on the gas sometimes.
Yeah, 100% agree.
So 193 trades doesn't mean that I had 193 signals. I may have had maybe on Monday 1 signal, maybe on Tuesday another 2 signals, and on Friday I may have had like 5 signals, but I took in like 30 trades.
So you kind of split. Let's say if you want to trade, 10 lots, you might do 10 times 1 lot or something like this.
Actually, what I do is I know that each entry is 0.5% of my drawdown, which is very, very small. Okay. And what I do is then, okay, if I have 2 entries, then I have 1%. And then at the degree that the market gives me more signals, I become more confident. I can putting signals, and I only count how many entries I have to know my risk. So if I have 10 entries in, okay, so then that means that I have 5% of my drawdown put on. So, and that's how I manage the risk quickly, because I don't have time to do it, and I wasn't doing it with the lot calculator.
Market.
I was doing it manually.
Very interesting, really. Thanks for sharing that.
No problem.
But also, when you say 5% risk, you mean 5% of your drawdown, so 5% of 6%, right?
Everything. This is high stakes, so this is 10% max drawdown, and I take 0.5%. Normally on my master account, I take 0.5% of the drawdown. Everything I calculate is on the drawdown. That's the space I have. That's the risk I can. That's the balance is really irrelevant. It's the how much you can lose. That's what's relevant in this case.
Yeah. The balance is more, extra leverage on the leverage that you already get, so that's all it is. At the end of the day, I think somebody that talks about this as a lot is Scruff. When you're trading prop, you're trading the drawdown that you've got in the account. That's why, where if I've got $10,000 drawdown, well, I'm actually risking 10% of my drawdown per trade. That's what I'm really doing. It's like 1% of the account, but really it's 10% of the drawdown. So that's in my opinion, if you want to pass a prop firm, that's the way that that's the way you've got to look at it. You've got to look at it is how many bullets have you got in your gun? If you're going to spread it out for 10 bullets, and that's, so on and so forth.
But I think
fair play.
I mean, it's just a different way of looking at it, because basically what I do is I look at, I take a certain percentage, and then I look at that and say how many losses can I have on this value or percentage before losing the account. So I think if you calculate that on the percentage of the drawdown or percentage of the account, I don't think that matters. I think it's just what matters is, like you said, how many bullets do you have? Like how many times can you lose in a row without losing that account? And for me, that number is usually a 0.25% of the whole account.
The thing is, you can do this as complex you want, because yes, if you only make that calculation one time, it doesn't matter if you're doing a calculation based on the balance or based on the drawdown, because it's the same absolute amount in the end that you're aiming for. But the thing is, what I do is I calculate it every day, so it's on the available drawdown every day. I take 0.5%. So if my drawdown is I am in drawdown, my risk automatically will be lowering based on the available drawdown. And the same thing, if I'm in profit, it will be going up because I have more drawdown, I have more balance, more equity from the max drawdown limit. And that way, what you have is, you will get, if you put it in a graph, you will have like a exponential growth going up. And if when you're going down, you're going the opposite of the exponential. So you don't have the same, it takes more losses to reach your max drawdown, because you're always decreasing as you're going into drawdown, you're decreasing your risk. So you're actually betting less. So actually, to reach max drawdown, doing this kind of position sizing is very difficult. It's going to take a long time to reach your max drawdown limit. So it depends, but this is, of course, you have to like doing that calculation, because you're going to be doing it every day. So if your personality isn't into calculating things and knowing everything and calculating every day, you're not going to like it. You're not going to be doing it well, and perhaps it's not for you. You better just stick with a fixed value, $50, $100, $20, and that's it, all the way up, all the way down, and that you keep to it. But if you're adjusting it every day, I believe is better. You can optimize your risk, and you can if it wasn't for the daily drawdown, you could have exponential growth on the account, because as you're in profit, you'll be increasing each time your lot size. But you can't do that because you have daily drawdown. So you have to know your data to know how much you can increase your lot size.
Nice.
And that's actually, I mean,
I think I think for most people, it's different ways of calculating it, but like you said, it's just try to find that number where you feel comfortable, and you look at how many trades can lose in a row before you loosen that account, and find a number that you're comfortable with, right? And for me, I think when I look at the 6% drawdown, if I risk like 0.25%, I can I believe I can lose like 20 or 25 trades in a row before losing the account, and obviously that's not something that's going to happen. So choose a risk amount that you're comfortable with, and knowing that you can go into drawdown without losing that account.
I do have to put out a disclaimer though, for new traders and traders that don't have enough data and don't have like years behind them. The way I show this, like in one day, one setup, I pushed it, I passed phase one. That's not actually how it usually goes, and it's not the way to do it if you want to be consistent on the long term, because it's not about doing it fast, it's doing it well. And before you can do this, you need to know a lot of things about yourself, about your strategy, about your data, about your drawdown, historical drawdown, your intraday drawdown, because otherwise you're going to be blowing and throwing away money and making that growth, that process of becoming a trader, very expensive. So this is maybe great to show. It's a show off, but it maybe next time I should show like a gradual growth over 6 weeks or 8 weeks, how to reach it, because this is not everyone should not be doing this.
I'm looking at the equity curve there, and it's like my eyes are playing a trick on me, because I'm like, is that a straight line, or is it like small ups and downs to the equity curve? You know, when you're watching a screen kind of flimmering, I get that feeling. But that's actually, I figured out that you've taken so many trades that's actually like, looks like a perfect, you know, staircase upwards right there. It's insane.
No, the thing is that in this case, I didn't close the trades straight out. What I did is I hatched them with an opposing trade, of course. And as you close, because I have many trades on, as you close one, you will get one staircase, one flight. I mean, stair flight. And then as you close all of them, you will find that automatically your equity curve will form that almost perfect move up. But it's because I'm closing in by doing hedges. Yes. It has nothing to do. You don't have to do it like that. It's just something I do.
Plenty of ways to skin a cat, as they say.
The hedge is just one way to close it, because the thing is, I didn't really have to hatch it. Normally, when I hatch is when I have like the market has gone so far, so fast in your favor, and you think there's more move to it today, but probably now is the good place, you know, to secure what you have, and then you hedge it. You take off all the stops and take profit if you're allowed in the program, and then if the market traces back and you might find another signal, then you have that option to unhedge some part of it and win with the second move up or the third move up that might be coming. But it's not something necessary to be doing. It's something just possible, just one way of managing how you close a trade.
All right, we got news coming out in couple of minutes, about one or two minutes. We're probably not going to see much happening on that. It's I got stopped out on EU at the worst possible way, because
right
now
before it started turning.
You know, full transparency. This is the most retarded price action I've ever seen in my life. I think a lot of
that means your stop was too close. This is good price action. Your stop is
no way, man. This price action is
the market is wrong. I'm not wrong.
Yeah, we obviously have market makers watching the live stream. You know, we got like the Federal Reserve is obviously tuning into. They probably have a FIBOS account as well, and they're like tuning in and like checking the markets. Like, yeah, okay, Jonathan has a stop right there. We're gonna run it. If this pumps straight up to TP, I mean, this is a over 7 or.
And this is just me. You could still get back in. So this is a place where you can see, even if it stops you out, and this is why I say, you know, on lower time frames, even if you get stopped out, and this is what Victor as well, he gets stopped out as long as the trade is still valid, because that's what happens when you do have stops that are close. You're going to have a low strike rate, but the risk to the reward is.
Look at the comments. Yeah, like John forgot to use the meh. Jonathan didn't trade the meh. I love the meme we're creating here. Well, you know what? Let's put on the meh indicator right here. And yeah, it's you actually see that according to the meh indicator. Well, actually, you know what? Holy shit! I should have put it right here.
You know, we had a 5ers trader actually come to visit us in the office today, and we were talking about everything we're doing in the live trading room from Manchester. And he goes, we're talking about strategies, and he mentioned the mayor. He mentioned the mayor strategy. It just goes to show, we're obviously people are enjoying the mayor. The mayor.
Yeah, I absolutely agree with you that you have when you have a setup being stopped out for the wrong reasons, you got to enter. Like you got to enter again, because like I said, if you get stopped out for the wrong reasons, I got to enter again. So yeah, I got to enter again.
Nice.
Enter again. I try to repeat that to myself. This is not a mistake. This is not a mistake. Not doing anything stupid.
Don't worry. Part of the process, and part of the process. We'll wait for news. Obviously, news should either come out right now, and then we'll.
It's out right now. We're seeing the action right now.
It's already out. It's already out. Yeah.
This is
we're still in the
climactic reaction right there. That was really not.
It was lower, much lower than expected, actually. But yeah, like the market really doesn't care.
Oh, so it's quite good for the euro though. If it's lower, then if consumers, you're saying if consumers are not going out spending, maybe they're a little bit scared, so there's not going to be development. So maybe they're gonna, less confidence in the US dollar. Is that what you were kind of looking at, Dirk?
Yeah, for sure. But like I said, this is how it should work in theory, but in reality, nobody really cares at the moment about it. I mean, it's really, even if you look like NFPs, for example, were like such an event every month. But it's like not really impacting the market that much anymore. Expect maybe when you have like the real number deviating very much from the expectations. So that's why it's all about inflation rate and whether or not the Fed is going to lower interest rates or not. So watching Jerome Powell is the key to success.
We have a little bit of a 10-minute break, and then obviously Victor will be leaving us as well, and then we'll go into the crypto part of the session, and we'll talk about everything to do with crypto.
Wait a minute. Can I trade news on this account? I'm on a high.
Yes.
This is the
2 minutes after news.
Oh wow, that was like 2 minutes on the second. Holy shit!
Violation.
Oh, good.
Strike
God.
number 1.
I'm glad we're teaching the audience the good risk management and the good ways of trading.
Oh fuck me! I'm gonna get some coffee.
Go on, we'll have copy, and thank you very much.
We're still on my screen. Why were we still on my screen? Let's switch to Dirk.
Before I go, I got one setup that had a signal. Maybe I can show that before I go. So we did have the yellow horizontal lines. That's the area that I was looking for the setup. And we did get this is the neckline on the 3 minute, right? That's the neckline for me. And we did have an area where price came in. And if it's on the 3 minute, you can also find it. This is also the neckline on the 1 minute. And this is then the head. So the structure is as following. It's this, right? That's the activation of the quasi. It's coming back for the right shoulder, and it closes on the same place it opened the previous candle, and that's a signal for me. So here, normally I didn't take it because I was talking, wasn't paying attention, but that would be my entry, either at the close or in this bar, somewhere in that bar, and then my target would be based on the higher time frames. So I go and check, okay, this is the ATR for today. That is a relevant place market might be targeting. So I would choose based on probabilities which one I think it will hit, and that's the 50% retracement of the whole movement as it came down. So that could be also a great place to be putting my TP. I didn't get in, so first FTA would be here, but I didn't take it, as I said. But that's
even with
one
the retracement coming right now, even with that retracement coming in right now, would you not go in market just to get into the position, even once you've seen a bit of reaction?
Come on, Victor. Market,
I sometimes do that. There you go. I got in. See that? I had a limit order there because I missed it.
Same time as I am. Let's go.
I had a limit order because I was late, and I didn't want to be, chasing the market and opening it here. But the price, this is exactly order block. That's the reaction of. That's the reaction. If I take this off, right? Look at these reaction. Doesn't mean that this will work at the end, but comes back, touches the order block to the point, I should say, moves away, leaves another order block, and comes back, hits it again, mitigates gates and reacts and maybe moves out. That's exactly the pattern that I look for in the market. And when this falls into places with the H1, H4, then I know that I have different time frame, different participants, short-term and day traders, scalpers as well, all lining up with the same idea. And then I can perhaps target something higher. I didn't, let me see if I can. I didn't know what the risk reward was. Actually, I put it in without even knowing what it was, but hold on. Didn't I? Having a difficulty with this. Yeah, that's my last FTA, but I don't know if this will happen. We'll have to look at that. It's 9.3 reward to risk. Let's see if it handles with absolutely no drawdown at this moment.
I mean it's incredible. The fact that we're looking at 9R setups here, it's just it's incredible. I mean, yeah.
By the way, the setup of yesterday, the 7R, it hit TP. Doesn't happen all the time, of course, but it hit TP.
But with these kinds of R's, you can have the low hit rate, of course.
Yeah. That's it.
All right,
guys. We'll have a 10-minute break and we'll be back then, and it will be crypto time.
Crypto.
Yeah.
That's it. See you later, guys. Thank you very much. And
all right, guys.
See you later. See you in a bit.
Thank you for having me.
All right, welcome back, guys. Now let's talk about crypto.
Crypto.
So, Dirk, I wanted to ask you about. I'm sure.
Do you want to reset the screens? Yeah. Do you want to reset the screen? I don't know why my screen layouts are awful. No, and there you go.
All right. So yeah, we gotta fix that. We gotta see what we can do about that. Dirk, I know you talked about the inflows and outflows of the ETF.
Correct.
Maybe you could kind of go through that and explain it to somebody who has no idea what that is and why that's why you want to look at that.
Before we do that, Doug, were you having drama on Twitter? I saw the other day.
I did. I have a badge now. I got blocked for the very first time by another influencer, and I was actually kind of proud by it, just because I called him out, for the obvious ruse scam he was doing there, like always pointing out his good trades but never mentioning his bad trades. So I shared a screenshot in one of the comments, and obviously he didn't like that. A bit of a drama queen.
How come they have so many followers? They have to buy them, right?
I have no idea. So
some of the biggest, I think, some of the biggest accounts in crypto Twitter, some of the biggest ones are like super scams, like super big. But they're entertaining, and the people they get. Yeah,
guys, I'm getting DMs. I'm not gonna say on a daily basis, but I am getting DMs with offers from different altcoin products, and they're offering a lot of money to basically do promotions for them, and without actually saying that it's a promotion. So undisclosed ads, right? So people come at me and they say, they DM me and say like, well, I'm going to give you, a couple of ETH, which is like 1 or 2 ETH. And I think Ethereum right now is at like 3.5K. So he said that's a lot of money. That's like, 3.5, in some cases like 6 or 7K to basically post and recommend a product and basically have it pump it for them, right? And this is how most people make money in crypto on Twitter. Okay, so remember that when you see these big accounts out there shilling different products, showing you charts on different altcoins, it's because they are getting paid to do that, and they're getting paid quite a lot. And it's just a pump and dump scheme. And I think that's a lot of that is what Dirk is talking about. And the guy that you got blocked by is like he's posting 10 different setups, and he deletes them if they're losers, and then retweets the winners and say like, yeah, this is the winner. It's a lot of scams in this business, and I think it's very important that you guys watching here understand this, especially now that we're going to start talking about crypto, because it's bad in Forex. It's catastrophic in crypto.
Yeah, sadly it is. But I take it as an honor, actually, that I was finally
rite of passage.
A rite of passage, exactly. Yeah, let's talk about Bitcoin a little bit. So I've been talking a lot about Bitcoin ETF inflows, like Jonathan just said, in the past couple of weeks, actually, I have to say already. And because I'm right now having this theory that obviously there is a high correlation between the Bitcoin ETF, Bitcoin spot ETFs, I should say, inflows. So on every day where we see large net inflows like 400 million, 500 million, 1 billion here, we had early in March already, we usually also saw quite significant, no, that's the wrong chart, here it is, quite significant green candles. And I always said when that stops showing, like when we see, for example, large inflows of 400, 500 or billion US dollars into the spot ETFs, and we don't see much price action to the upside anymore, that could be a sign that we are the local top. Now, we had this once here, for example, on a day like this, but at least for me, it was like impossible to tell at that point, like, okay, this is going to be the top now because the candle was not green enough. So ideally, it should have we should have seen this in a couple of days in a row. But however, we had this correction to the downside now. And what we see also now for the first time is that those inflows into the spot ETFs have gotten lesser. So you kind of see now the people who probably before that never had any crypto, never owned any Bitcoin, but invested into the Bitcoin ETFs, they also get like a serious case of FUD, right? Market is going, they are not used to buying an asset that has a daily volatility of 10, 15 or 20%. You know, we as hardened crypto investors that have been through 2 or 3 bear markets already, we just shrug our shoulders at that. Like, oh, it's just down 5%. That's like nothing. Oh, what? And
what is the red red numbers? Is that
GBTC.
outflow?
Yeah, that is GBTC selling. So that's the Bitcoin future ETF that everybody was investing in prior to the Bitcoin spot ETFs being available. And what we see now is those people that invested into the future ETF, they are pulling off their money and investing it in the spot ETF. That's why you have large outflows. And I think they are still sitting on 100,000 Bitcoins or something. So there's potentially still a lot of outflow coming or shifting into from the future ETF into the spot ETFs. However, what I like is, BlackRock has been very vocal. The CEO of BlackRock has been very vocal about, just mentioned the other day, I saw an interview with him where he said, like, everything our clients are talking about right now is Bitcoin. So there's a huge, huge demand. It's by far the best performing ETF in terms of attracting volume that we've seen in a long, long time. So that's very positive. And I actually just did a video last week on the May 15th, which is going to be a super important date for Bitcoin. That's not the halving. The halving is going to be 20th of April. But May 15th is going to be super important because there the so-called, what are they called? I think F7 filings or something, F13 filings are due. That means, like, if you are a money manager in the USA and you have more than 100 million US dollars of that you are managing for your clients, you have to, every quarter, you have to report your positions to the SEC, and then this information is going to be made public. So it's always, of course, very interesting to see the heavy hitters out there, the super large hedge funds, what are they currently invested in? Or how has the positioning changed? On May 15th, we are going to be able to see for the first time who of those institutional investors, hedge funds, pension funds, and so on and so forth, actually have bought the Bitcoin spot ETFs. And the CIO of, I think it was BitMEX, said already we should prepare for some nice surprises there, like to the upside. But probably there are going to be names on that list, on that filing, that nobody expected to be invested in Bitcoin. So this is going to be very interesting. This could like push the market further up, in my opinion, as well. But still some time until then. So let's look at what's currently going on in Bitcoin. I have to say, this candle we saw today, or actually we saw over the past days, this is a weekly chart, it kind of surprised me. I think we just chatted about this also last week, if I remember correctly, Jonathan, where I said it looks for me a bit actually as if Bitcoin wants to go correct all the way down to at least the blue line here, which is the 8-week simple moving average. And when that happens, usually you will see a continuation also down to the red and yellow line, which are the so-called bull market support bands. And this would have been a correction of 32%, which is actually something quite normal. We've seen this in all other bull markets as well, corrections by 32% just to go up again. Well, in this case, to my surprise, we already see the price action to the upside again. So we were trading, I think, at 71,000 US dollars earlier. And so it could be that this, what we saw here in terms of correction, those 17%, that this was already it. And it's kind of a shame because I had my limit buy orders down here at 58,000 and then lower at 52 and 51. So I missed an opportunity to get a little bit more exposure than I even have into Bitcoin. But yeah, things are looking quite promising at the moment. If we look here in terms of, which one did I want to show? Not this one, not this one. Where is it? Okay. Yeah, oh, sorry, it's still this one, yeah. In terms of when to expect a next correction. And there's something very interesting. So far, the the amount of time between each bull market local lows. So where the bull market made a local low, a higher low, and then continued, made a higher low, and so far, and so on and so forth, were always between 13 and 19 weeks. And if we just assume that it's going to stay like this, something very interesting happened. From the last local low, 13 weeks into the future would put us exactly at the date of a halving, or the week of a halving, I should say. And 19 weeks into the future from the last local low would put us into the beginning of June. And this would very well fit also the narrative that we usually see after the halvings, kind of a difficult phase for Bitcoin. So we saw this here in 2016 after the halving. Price started dumping first. We saw the same here in 2020, where we had like for a couple of months a slightly bear market, or at least sideways ranging markets. We are probably going to see something like this again this time if history repeats itself. And I'm kind of preparing for this to actually happen somewhere between the halving and 6 weeks after the halving, that we see this new local low then, and then the bull market run should really pick up to the upside then.
Let me ask you something. Like, how are you? So you're saying, like, how are you preparing for that, for the fact that you might have a pullback and a slower period after the halving? So are you if you look at Bitcoin and the levels that we talked about, maybe 50K as a good level if we have a deep retracement, are we thinking about those levels still?
Yeah, very, very much possible still. But if you project this in the future, the bull market support means if price just stays where it is at the moment, you can see that they, at the time of the halving, we're not talking here about prices below 50K anymore. We are more here in the 57, 58 region already, and which also, would make sense. That's not a huge correction actually from where we are at the moment. So that would be possible in terms of, one thing I'm not doing is I'm not trying to short this. I think this is like a mistake you actually would do in a hefty trending market, in the super bull market. And we all know how parabolic Bitcoin or crypto in general can go all of a sudden. We've seen a good example of this the last days now again. Yeah, from 66,000 all the way to 71,000 without really taking any break. So I don't think it's a good idea to short something like this. That's why I said earlier, I'm always ready then to have my limit orders, which would be here at the blue line. So the 9 weeks moving average, the 8 weeks moving average, or the bull market support points. These are areas where I would buy then again. In terms of exiting Bitcoin, I, of course, have like this portion of my Bitcoin position, which I'm never going to sell. It's like, I always tell Gaur, this is my retirement Bitcoin. And in terms of when is the right time, where's going to be the bull market top? Timing wise, I think we should see it probably somewhere in early 2025. In later 2025, because usually you have like 12 to 18 months of a bull market, and then you have this blow off top to the upside. In terms of where could it be is, now a couple of weeks ago I would have said probably somewhere between 200,000 and 300,000, but actually you mentioned something in the last stream which I find quite intriguing when you said, you Jonathan now, when you said the extension of the Fibonacci zones to the upside, the 1.61 Fibonacci extension is pretty much at $100,000. So this could be, if not a local high, something maybe where Bitcoin then, where Bitcoin maybe finds its top this bull market. That's a possibility, in my opinion. Yeah, I don't know how you see it. I think probably also the price everybody is eyeing at. One thing I would be careful about is, when everybody starts screaming again, having the laser eyes on Bitcoin, starts screaming like, wow, we are going to see 100K before the halving for sure. It's always the time to be a bit careful then. But you can see, like, it's extremely hard also to time then where is the local top. That's why I say I don't want to implement a short strategy here, because prices move so fast all of a sudden to the downside. because, I don't know, Coinbase servers all of a sudden don't work anymore. They cannot execute orders anymore. Bam, we are 10% lower all of a sudden. So the strategy really is here, if you still believe this is a bull market and you are waiting for the right time to invest into it, with swing trades, for example, watch for this 8 weeks moving average on a weekly chart, watch for the bull market support bands. These are usually the areas where price sooner or later then reverses. This is only true for a bull market though. When we see the top of a bull market and go back into a bear market, things turn around to the other way, of course. But of course, I'm going to inform you also on my YouTube channel, on my Twitter, when I think this is going to be the case. We still have some time. Another interesting concept I'm looking into right now is this year, the so-called power law for Bitcoin. This was designed by Italian physicist, Giovanni, I don't know his name, which applied a power law, which you can see all the way everywhere in nature, to Bitcoin, and found out that with this he can time the bottoms and tops of Bitcoin very, very well. And I'm kind of waiting for a paper on this scientific paper to be published so I can look into this if this is really valid. But it looks very good on the paper. And he says right now we are actually going into the phase where we transition into the full bull market. So when this curve hits zero here for the next time, which is probably going to be somewhere around September, October this year, this is when the real bull market starts then. And I find this kind of intriguing because he expects prices north of 200K in 2025 then.
What is this? So how would you read this then? What are we looking at? Yeah.
Well, we are looking
a lot of information here.
Yeah, there's a lot of information. Maybe I zoom in a little bit, makes it easier. What he does is he gives you a fair price. So according to his power law, that's the little red number down here, the fair price of Bitcoin at the moment is at $62,631 US. This number goes up every day because it's an infinite growing asset by his definition. And so he basically says everything below that price, which are the levels down here, I think, are always good times to buy Bitcoin. Everything above that, well, you should be a little bit cautious there. It might not be the best timing in buying then. Looks a bit like this if you make it a little bit more visible. So right now, the blue line here is like kind of the fair price, which is rising for Bitcoin. Because we are above that means we are a little bit overvalued at the moment, but which of course is in a bull market not uncommon. But as I said just now, I'm looking into this at the moment. I don't know yet, is this really valid, or is it, a case of I take data and then I juggle the data so long for the necessary amount of time until it fits my opinion. That's why I'm a little bit cautious at the moment and talking too much about myself. That, and the gentleman is like very outspoken. He's like one of the people on Twitter. He constantly fights with everybody else. So it's kind of entertaining. Yeah. Congratulations for passing the bootcamp. Wow.
Yeah.
Well congrats, done, man. I saw that. Wonderful.
Do you do any kind of futures like trading, or is it just spot?
It's spot for me because I'm invested very long term. It doesn't make sense to buy a Bitcoin future if you want to stay in it for like 1 year, 3 years, or 5 years, because you're going to pay the overnight financing or these financing fees they charge you. I think every 4 hours is in the perpetual contracts. Don't do that. Do spot and then just put it away somewhere in a cold wallet. Don't leave it on an exchange as well. We've seen plenty of cases during the last bear market where that was a mistake. The most prominent, of course, being FTX there. I do trade futures sometimes if I see a good setup, swing trading setups for either Bitcoin, Ethereum. I'm not at all trading any other altcoins because I want to stay with the most liquid pairs, which obviously are Bitcoin and Ethereum, but it's very rare. I'm experimenting, however, at the moment with grid strategies on Bitcoin futures. So more on that hopefully next week, maybe.
Nice.
I want to switch over to my screen and show you what I'm currently looking at on Bitcoin. And I think So this is the setup that. The thing with this setup and the way I'm trading Bitcoin at this point is basically this would mean that this is the bottom, right? And we're not going lower in a long time. So basically I'm betting on this trade here. I'm betting that this was the bounce, right? This level right here that we retested. This is the bottom, and we're not going much lower. So the top is going to be higher, and when we're talking about that 30% retracement, that's going to be starting from a much higher point. And I think that's likely. I think if we get a big push to the upside on Bitcoin prior to the halving, we can still have a 30% retrace and not come close to the 50K region. So, but the thing is, I'm very, very aware of the fact that we might get a retrace, and I'll be stopped out on this Bitcoin position. Because if you look at the weekly, just to show you these green lines right here, it's just I'm using the fib tool, and I've added the one, so the 0, the 1, 0.25, 0.75, and 0.5. So I get equal. I get 5 lines equally spread out within a zone, and I will place my limit orders on these lines to get an average entry, which is the middle line. So basically, I have limit orders for Bitcoin. 2 of them have been filled down into this area, and then I will be fully filled here with my stop loss down in this region. The reason why I decided to go long here is, from previous live streams, I went short here, and then I went short here. So I had two successful shorts on Bitcoin, and then we saw a reclaim of this level. And to me, in the 4-hour, this just looks very, very bullish, where you have like that rounded bottom, you have the downtrend here, you have the higher low and the higher high, and I can definitely see how we're going to move like this. And therefore, I want to try to get in on a long here for that push higher prior to the halving. Now, the problem is this level below, got the weekly, so now the weekly 20 EMA is here, and it's still a very good level. So that in a 51K region where we got the reload zone here, it just looks like a very, very good level for a retest. So if we are going to get that 30% retracement from the high, I think down here is just the perfect level. So I think with the weekly 20 EMA down here at around 51K, I think that is a perfect level. What I'm a bit worried about is I'm in very good positions on altcoins. So obviously this trade here, this is just like any other trade. But when it comes to my altcoin positions, I feel like I'm in very good positions on these. But I do fear that unless they can start moving, unless they can break this high area, I do fear that we're going to break this low if Bitcoin has that 30% retracement. And yeah, that's going to be problematic. That's going to be very problematic.
The thing is also, if Bitcoin has this kind of retracement, altcoins are going to bleed even much more, because remember, Bitcoin is, so to say, the risk off asset when it comes to cryptocurrencies. If you want to stay in cryptocurrencies, apart from stable coins, obviously, and you want the safer bet, you're probably going to move your money to Bitcoins and not necessarily to altcoins. So the swing down for altcoins can be very quickly like 40, 50, 60% then.
Yeah, so I'm basically betting on, at this point, I'm betting on more upside at this moment. And I do feel like, looking at just a naked chart here, that weekly wick here that we got on the close here, I really like that wick right there. And I feel like if this is the bottom, if this is the local, if this is the retracement, because you got to understand, we are in a very different scenario now with the spot ETF. That's a big deal for Bitcoin. So if it shows that we get more inflows from the spot ETF, we have a very different scenario than what we had in the previous 2 bull markets. So a retracement like this is coming down, going up into all-time highs, coming down, testing the all-time high region, and adding a horizontal level here, you see that this is a very good looking horizontal level. And if you add it, if you kind of move it like this, you'll see that I like that level. And if you add a horizontal line on that weekly wick, you see that right here you come down and that wick kind of fills that whole previous all-time high area. So if the spot ETF means that we're in a like more bullish environment at this point, and like you said, when we get that report to show where the real big players are placing their money, if we're going to get some pleasant surprises, I do believe like maybe was that Arthur Hayes that wrote something about that, I believe, from BitMEX. The previous BitMEX founder wrote a blog about that, saying how we might see like some real big players. And I know Edward Snowden went out and tweeted a couple of weeks ago saying like he suspects that a nation state has been accumulating Bitcoin. And if news of that comes out, that's going to be extremely, extremely bullish. So there is a possibility that this was the retrace.
Yeah, and let's also not forget that I think you mentioned that the last time we talked here about Bitcoin, or I think that's actually true for almost any asset out there that is tradable. Whenever an asset makes a new all-time high, it just normally doesn't stop shy of the old all-time high. Meaning here, if our old all-time high was 69,000, it's very unlikely that we stop already at 73 or 74,000. It's more like a parabolic move up, like to 80, 90, 100, maybe above 100,000 that is going to happen there. That would really be something that surprises me.
So you mean like an explosive move to the upside from current level would surprise you?
No, I mean if we don't see much higher prices, because usually when something breaks the old all-time high, any asset, Bitcoin now, for example, it doesn't just stop like at a new all-time high that's just a little bit higher than the old one. Normally you see an extended move to the upside. New all-time highs are usually very bullish signs, no?
Yeah, and we also have the spot ETF and halving kind of like at the same time, which is a scenario. And also the report should come out at the end of the quarter, right?
Yeah, it's always 45 days after the quarter ends. So that's why it's due on May 15th. That's why I said this is such an important date. And of course, especially the big players, they wait with their filings until the very last minutes, because they need to be transparent, obviously, according to regulation in the States, but they don't want to be the first ones out there that report the holdings. It's going to be really, really interesting. I'm super, super hyped for not only the halving, but especially to see, okay, who are the ones really investing. I mean, we've seen, over $10 billion of inflows were into the Bitcoin ETS alone. Yeah, BlackRock alone has accumulated $13.4 billion of Bitcoin for their clients. And for sure, this is not, your uncle and auntie that are buying there. This is largely through institutional investors, because, in order to become a client of BlackRock, usually you don't have like your 20 or 30 or 50,000, you're more in the millions of US dollars. But of course, this instrument is just normally available to the public.
Yeah, no,
exciting times ahead.
Yeah, definitely. And I'm looking at the technical series, the price action of what we're watching here on Bitcoin. And I would say that you usually don't get such a clean structure on Bitcoin. Usually what you get on Bitcoin when it's when it's like high momentum is you get these moves where you have the break above the range, never retest that one, and you have another accumulation, and then like boom, up to the upside, and then straight down, takes out all the stops here, and then continue up with minimal retested. So now what you're getting on Bitcoin is a very clean structure, and we usually don't get clean structures like this. This is usually something that I can see in the Forex market, right? Where you have like clear trends here, and you get a break and retest. Like this is Forex trading stuff, right? But if you look at the overall market here for Bitcoin, like we don't like in this trend, you can clearly see from nowhere in this trend to the upside do you have any like super clear break of structure and break and retest setups. It's just all very, it feels like it's momentum driven and news driven in a sense. But here we actually have almost a perfect this is what I would call a perfect
and
break and
handle.
retest. Yeah, it's the
Cup and handle, yeah.
picture perfect.
It's becoming a mature asset class, no? And this is attracting liquidity. And when you have a lot of liquidity coming into market, you see similar structures to other liquid markets. So in this case, for example, Forex.
Hopefully, it will solve all the cascading wicks that we have. Well, we used to get some ridiculous wicks, but I think it was an issue that they had on
Coinbase, no?
Yeah, just a wick. Not something happened. I think probably on the server.
You had BitMEX where the liquidation engine that was on COVID, I believe, when you had a COVID crash.
Last week.
Last week was something too.
Oh yeah, last week on Coinbase.
I don't know which exchange it was. Yeah, like a wick down to 10K or what was it? Something like 12K.
But surely, if somebody had a limit order over there, it wouldn't get filled.
No. They said that right away. Also, orders were not executed.
Yeah, it's just
a glitch in the engine.
Error.
There was also
it doesn't mean that people are getting stopped out either. It's just literally just a.
That would be interesting, actually. They didn't fulfill the limit buy order somewhere, but they stopped everybody out. It would be typical exchange stuff happening. This is how they play.
There was a moment in time where people were trading on BitMEX, and that was in 2018, I believe. On this very low, when Bitcoin dropped all the way to 3,000. So it dropped from around 6K to 3,000 in a matter of weeks. And I believe this was at this point where the BitMEX, now I don't know exactly how it works, but the BitMEX, they had a stop in their liquidation engine where basically they saw that you had cascading liquidations, and this happened across different exchanges. So they shut down all trading on BitMEX, which at this time was the biggest exchange with the most liquidity. And a lot of people argue that is what basically saved Bitcoin from going way, 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 way lower.
Yeah. By the way, this is a mechanism that you see on stock exchanges as well. You have normally like a price window, the German stock exchange, for example, where they say like if this stock has a higher daily volatility, or the volatility is exceeding X%, there's a timeout like of 10 to 15 minutes. The order book goes into a kind of auction mode again to find to calm down the market, that everybody has the time to overthink again how they are positioned, if they want to add to the orders, if they want to reduce it, and so on and so forth. And this very, very often is then responsible for that you don't see those crazy wicks to the upside and downside on the intraday charts in German stocks. I don't know if there's something like this on the NICE. I'm not sure.
Yeah, I think there's, it's a little bit like halts in a way, no?
Yeah, it's a trading halt. Absolutely,
yeah. Which is a good thing, because you have algorithms out there which could just go haywire and just start a crazy liquidation spiral to the downside, and that would just be. Yeah, we've seen some insane. It's going to be interesting to see how that is going to work with the rise of AI and more advanced algorithms out there, and because it's going to be crazy, guys.
AI overlords. And by the way, everything in crypto will go up except Solana. I just said that to.
Let's not get ahead of ourselves right now. I know, Dirk, you are an expert in Bitcoin, but when it comes to altcoins, I'm sorry, but
that's true. Yeah, that's true.
You're a little bit rusty. Solana,
should we
100,000?
Guys, should we think about maybe starting a giveaway?
Sounds good.
To 2 hours now.
How can I participate? Oh, I can.
How can you participate? Well, first of all, what you have to do is you have to like the videos. Right now we have 527 likes, and for every
change everything.
Let me.
I'll do that.
Correct me if I'm wrong, but with every 100 likes, we're giving away how many?
But every 100 likes, it's 2 accounts, 2 20K accounts.
All right.
Wow, somebody wants 100K bootcamp per 100 likes out there.
Yeah. Can't please everyone. No. unfortunately, as much as we want, we also want to give people as much opportunity. People were complaining that the 250k account, they could only have 4, and so now we're doing less accounts, and now people want the big accounts. But we're trying. Let's have a look. Let me
If
just.
you wanted to give your name,
I've set it up, so that way I'm just going to do it right now. Let me just set up a new one. Do you want to explain to people, because a lot of people don't know how these new giveaways work? So people that are here, do you want to just, Jonathan, while I set it up, do you want to just tell them, and then we'll give.
Right. So you're going to have a link. We're using a platform called Gleam, and you're going to. There's going to be a link, and we're going to. Dirk to the moon. There's going to be a link. It's going to be posted in the comments.
Kind of like
so if perhaps Alex has the link, you could perhaps post it in the comment, and I will then pin that comment to the chat. So you can go to YouTube. Just go to YouTube, go to the comment section in the chat, and the pinned there you will find a link. Not right now, just in a minute. And I'm also gonna make sure to mute ban
the word Dirk to the moon.
Yeah.
Yeah. I should have done that before.
Do that.
Why isn't it? It cannot be blank. I think it's all capitals, so it has to be all capitals. And guys, not here. If you're first time here, it's not how it's done. Okay.
I just closed some of my euro-dollar shorts, by the way. So.
Do you have the link?
Yeah, I'm gonna put it now. How many likes have we got?
Right now we have 600.
Okay, so we've got 12.
Accounts.
That's indeed we do.
Awesome.
Wow.
Solana to the moon. Definitely. I do agree with this. Thank you very much. Yeah, I do agree. Feel free to keep pumping those bags.
All right, so we got the link right there, and it's pinned to the comment section, so you can go in and click that link, and then you use the code Dirk to the moon, and you're in.
What I'm going to do as well today, as it's a little bit different, we're doing, instead of what I'm going to do, I'm going to show the winners just their names on the screen through like notes. I'm just going to write a note, and I'm going to, how do I write a new note without showing all my others?
See what my Euro USD trade is doing. Well, wonderful. I got stopped out on this one. But like I'm still up quite a lot on the accounts. I think honestly, like I would probably be better off not taking this trade at all.
No,
honestly.
Again, a valid trade. It was a valid trade, mate. It was still a valid
I mean, it was
trade,
a good,
obviously.
the
only thing that I would have said
level.
is on a 4-hour, I did the same trade, don't forget. The only thing that I would have said is at the 4-hour, you did have the 200 EMA, which was touched. Also on the 1 hour, which was touched, and it was a fresh touch. So it's normally you're going to see a little bit of retracement, but it's a very, very valid trade. And it's, if this one didn't work out, don't forget of all the other ones that did work out that you did have fantastic risk to reward on. So I wouldn't let that one just check it at the end of the month and see what you think. At least that's what I would say.
I think So I think what well, I need to be. I definitely agree with you, but I kind of need to be honest with myself as well and say like what you know, I kind of going back and thinking like what mindset was I in when, you know, when I entered.
Could you go back on
you
that
know,
trade and do replay for me?
Yeah, well, you know, yeah, we can do that. So a replay.
Let's go back onto that, you know, like
So this was actually the idea, right? Like
what about a 5 minute?
Yeah, so the idea that I had was basically this. So when price, I believe this, let's see. Yeah, I entered the first trade based on that.
That's a
So the fact that we can, but this was the trade, right? Like this would have been the trade, like that. And then if this one didn't work out, like it didn't right here, well, that should have been the end of this, right? That should have been an end of this. The problem is the first trade was like I had stop loss here.
Yeah.
I think that was the problem. Like having stop loss here, that should have been the end of this, and then I should have just moved on, like one loser and then move on. And now instead I had one bad trade, one good trade, but two losers.
I did tell you to get in as well, didn't I? It was like, yeah, get it again, hit it again.
Yeah, but I think that's a cycle that a lot of people get stuck in. Like they just enter again and again and again and again. You know.
That's what I do. That's what I do. Yeah. I enter until I am definitely wrong on that trade. You're definitely wrong on that trade because
you know what? Like I have to, you know, looking at the replay function here and looking at local price action. Like, yeah, sure, looks good, but the thing is, I gotta like remember what I thought about when I entered this, and I didn't really stop thinking about the fact that I'm long in resistance. You know, I'm long in resistance here, down here. I went long here. There's just only support. There's nothing to the upside. Here's the, you know, right here is the resistance that I'm selling. So there's no, like I'm buying support, but here I kept thinking and I kept telling myself, you're actually buying resistance. And like somebody said in the chat, like EU was at 4-hour resistance. It's quite risky, and I think that's what I have to remember. You know, tomorrow and the day after is like when you have that resistance on the higher time frames. Because remember, the way I'm supposed to be trading now is find high time frame support or resistance. But in this case, find high time frame support, look for break of structure in the lower time frames, and enter. Find high time frame support, break of structure, and here it's like.
High time frame resistance
here, like find high time frame resistance and buy. Like, you know, no, not really. You know, so I gotta.
But that's good. That's and that's why this 5K account is so good.
Yeah,
you can test
because I don't really care about losing that. You know, I can. Yeah. But funny enough, is like the less I care about the account, the better the profits. That's the thing. Like because I'm looking at this 5K account, like I would not care if I lose this one, you know. Yeah. And all of a sudden trading is going better than if I care about it. So I think, yeah, that's and I think that's why trading is so hard as well, because it kind of goes against everything we learn. It's like in trading, you're like supposed to be super professional and just enter a trade and then just let the law of probabilities do its thing, which is very hard. It's very difficult.
Yep. Hey, trading. But I still think. I
think I might have closed my shorts actually too early there. Seems like the price will go below the daily open, euro-dollar I'm talking about. And then I think we potentially could go all the way down to the weekly open and the previous week low at around 108. I just missed this on the 1 minute chart also. Damn.
Yeah, I mean, definitely. I mean, this we might get a big move to the downside. Definitely. I mean, if you're looking at the daily, sure, it's we hit that daily resistance, which is also that 4-hour resistance. It's we could very well come down and test these lows again on the weekly open.
Let's have a look.
Yes, that's a very good level, definitely.
108, yeah.
Yeah, 108. Yeah, the month open is 108.50, 108.050. So I think that's
around this 108-ish.
yeah,
A
definitely.
bit higher, you're right. Yeah. 06,
Yeah.
07, something like this.
Okay, well, I'm going to put the. God, why do they make it so difficult to just? Can't they just show people without showing their names? Honestly, because even if I want to copy now and copy their names over, it won't do it without copying a whole box. It's super strange. Let's see if this works. Okay, so we got the winners. I'm just going to try and post them now on the thing.
Yeah.
I'm just going to write it. Go on. This is Lewis Henry. I'm just going to do super fast, guys. So I'm probably going to make spelling mistakes of your names. Please don't take it. Please don't take it personally. I just want to be really quick, just for the sake of being transparent, to make sure everybody knows how it works. Everybody's going to get an email off me with the accounts. Antonio Junior Ramirez. I'm just going to put Ram. Mohed Najib.
And Dirk Hartig.
Dirk. So we call you Dirk, but I hear on your videos you call yourself Dick. So which one?
Not
one?
Dirk.
Dirk.
Yeah.
Dirk.
But it's even for Germans, it's like almost impossible to pronounce. So it's okay, just say Dirk.
Dirk.
That's better than Dick. I might be a dick, but my name is Dirk.
I do apologize.
Yeah, I'm like, I thought I heard Alex say, like, you call yourself Dick. I'm like, nah, I don't think he does.
I try my best. I do try my best.
That's okay.
Sometimes it just doesn't always come out. Like these names, I've got them in front of me and I'm still botching every single one of them up. But let's see what happens as well. Crypto. I think we should make during the week maybe a crypto show. I don't know if you guys are interested in the show that we are talking about crypto. Maybe we actually trade crypto as well.
Oh,
maybe
Jesus, day trading crypto. It's like
maybe
for nightmares.
Maybe. Yeah, like because I know Jonathan's in some futures positions. I'm also in a future position. But we shall see. I'll speak to Jonathan about it. If you guys also have any feedback, you can also tell us. We had somebody that came into the office today, as I mentioned. He gave some really cool advice that basically they would prefer to see maybe like some more fundamental breakdowns of what could happen in the market, certain types of levels that we are all looking at on different pairs, because obviously all we trade is EU and GU, but some people might want JG, some people might want to know what's going on, Kiwi, all of these things. So let us know exactly what you guys want, and we will be able to kind of fit some stuff in.
Dollar yen is like also a beast to trade, in my opinion.
Yeah, do you know I've been getting caught a lot of offside, mostly on pound. I think I might cut pound out of my trade.
Oh really? I super much loved cable last 2 weeks.
Yeah,
some of my best trades. After I started listening to you with those EMAs, the 50 and 20 EMAs, they work so well.
I love them. Honestly, you can't really go wrong. The only thing that I can say is super easy way of trading. It's just not, doing.
You just gotta be patient and wait, for it to happen in zones like breakout over monthly highs, lows, daily openings, or whatever,
Exactly.
levels. Yeah.
Exactly.
So see, okay. I learned so much already. Now you got me addicted to scalping again. Thank you.
I'm glad.
Thank you in the name of my wife that I spend even more time in front of my trading screens now.
Okay, so how do I make this bigger, improve it? I don't know. This website is absolutely atrocious. I don't know how
String
this works.
String Plus.
Yeah. So those are all the names. Okay, I don't know how you can make this bigger, but they are all the names. Improve it. No, don't do that.
Awesome,
there you
guys.
go,
Congrats,
guys.
everyone.
Congratulations. I think if you press string and plus on your keyboard, you should be able to make it bigger.
String and plus.
Here we go.
I just did control plus, but there you go.
Or control plus.
Still,
Yeah, right. In English, it's control. In German, it's Steuerung.
Steuer. Very nice. I tried. Do you know my grandma's from Germany? You know, so they actually, she actually lives. So
you speak any German? Or?
I do not. No, I can drink like a German.
I'm not so sure about this. We should try that out. Test it out.
You know, English people. You know, we know how to have a good time, but we should try definitely. Maybe Oktoberfest. We should all go over and have some drinks.
I've never been to the Oktoberfest in Germany. The only Oktoberfest I ever attended in my life was in Singapore, which is like super ironic.
Yeah, very interesting. Wicked, guys. Well, thank you very much, and Dirk, thank you very much for joining us.
My pleasure. Thanks for having me
tomorrow,
again.
Guys. Tomorrow we're gonna do some scalping. We got Saul, the very CEO of the 5ers coming on tomorrow, and it's gonna do some live scalping. It's gonna be very interesting. I know that you guys have enjoyed having him on and watch him scalp. So it's gonna be a really interesting session tomorrow. So make sure you join at the same time tomorrow. And we're gonna have a drink off in October apparently as well, between Alex and
live stream it. Or,
no, probably have to do it live stream. Yeah.
Drink and trade.
That's never a good idea. Never a good idea.
Never a good idea. All right, guys. Thanks for joining today. Thank you, Dirk, for being here. Take care, everyone, and we will see you guys.
The winners.
Tomorrow.
You're going to get an email from me in the next 10 minutes with the code, with everything. So just wait on all the people here. That's how it works. I'm going to send you an email and you're going to be able to get the account. Pardon me.
All right. Take care, guys. See you guys tomorrow. Bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at